So if you look at kind of the total value of assets around the world, including debt, we're talking $900 trillion. And I think this decade, I can see definitely 1-2% of the global wealth, including debt, going into Bitcoin. So that that gives us $9 to $18 trillion in value. So
there's $900 trillion of assets out there. And if Bitcoin gets just 2% of that, that's what, $18 trillion coming into Bitcoin. And we know for every dollar that comes into Bitcoin, you've got to add something like a 3x multiplier on it. So if you have 18 trillion come into Bitcoin, ladies and gentlemen, that's, let's say it's 20 trillion. That's about the same. And you add a 3x multiplier on that. That's like 60 trillion coming into Bitcoin. So you've got to add 60 trillion to the market cap. And that puts Bitcoin at $3 million a coin if it captures just 2% of the global assets out there. So
this is for the first time in like human history where we can fully and truly own an asset. And I think that's really powerful. The miners, they hold just under 1.85 million Bitcoin. That's about 9%, give or take, of the total supply of Bitcoin right now. That's huge. And the fact that they're just holding this and not really selling it.
Okay, guys. So welcome back to the Fix the Money, Fix the World podcast. Today, I've got something a little bit different for you guys lined up in store. Today, we're going to be talking a little bit about price action for a number of different reasons. One, because I'd love to learn a little bit more about on-chain fundamentals myself. And two, there's a lot of talk about, are we in a bear market? Are we in a bull market? There's a lot of people undecided about whether we're in a bull market or a bear market. And everybody knows I'm a little bit of a perma bull. People think I'm a little bit crazy. I think we're going to hit $100 million per Bitcoin this decade. So I'm a little bit biased. So I thought, hey, why not get somebody on the podcast who's a little bit more unbiased than myself? So today we'll be speaking with the one and the only Daniel Zhou. He is an on-chain and technical analyst at Lightning Capital, and he's also an author and contributor at Crypto Quant as well. We've recently connected on these Twitter spaces, and he's a little bit of an up-and-coming young gun in the Bitcoin space. He's a hardworking young lad, and I've loved everything. Every time we've kind of talked in these Twitter spaces, I've thought, hey, I've got to get this guy on the podcast. So here he is, Daniel Zhou. Thank you very much for coming on, my friend. How are you today?
Hey, Luke, how's it going?
Yeah, I'm good, mate. I'm good. So maybe before we jump on into some of the charts, we can start with a little bit of background about yourself and what you were doing before Bitcoin, and just kind of let the audience know a little bit about yourself.
Yeah. So before Bitcoin, just have like traditional background in economics, finance, a little bit of marketing, worked at small tech startups, worked big corporate, everything in between. So just in general, I've always been fascinated by how money works, how like the time value of money, and just how monetary policy and interest rates and just all these things impact the markets. And for me, the big part was salaries, and working a job can no longer get you what you need for your future, like a home, right? And owning assets. So that really shaped the way I saw money, and I realized the importance of investing. So that's why it kind of led me on this path towards Bitcoin and investments, and understanding, kind of fundamentals and of course technical analysis now on chain. So, I never really expected myself to be doing what I'm doing today, but what I do know is that I really, really enjoy what I do. And this year has been just like crazy. I joined Twitter just a couple months ago, and now it's become, jumping on podcasts and writing analysis every day, for Crypto Quant and Crypto Potato, and joining, crypto funds. So it's just, things have gone really, really fast, but, really, really excited to be here and talk about macro on-chain technicals and Bitcoin. But yeah, that's just a quick summary of kind of my background. Yeah. I think you're muted, Luke.
Sorry, guys. I'm a little bit new to the whole muting, unmuting situation. I was just saying, I just made Daniel host. So he's got a number of different charts lined up for us today, guys. So I'm really excited to get into those and have a look at everything related to on-chain, and also a little bit of technical analysis as well. But that's really interesting that you were interested in money as a youngster or growing up. Like, you're still in your 20s. like myself. So you're still a bit of a spring chicken, mate. And not a lot of kids our age are interested in money or interested in investing. It's good to see more young people interested in money, but not only interested, but then learning about it and then helping educate others. I mean, some of the stuff on your Twitter has been really great. And I was reading some of your articles earlier over on Crypto Potato. I'm not too sure about the name of that website, but it's interesting. But I was looking at your articles, and they're really good, dude. I mean, they're really good. You've been nailing it recently with the more recent low time frame kind of price action. Actually, it's probably worth mentioning as well, before we jump into start looking at kind of more low time frame price action and charts and that kind of thing, I'd love to get you kind of zoomed out, bigger picture view of Bitcoin. Like a lot of people say, okay, Bitcoin's digital gold. It's going to be worth 1 or 2 million by the end of the decade. Other people think it's going to be a global reserve currency. So I'd love to kind of add some context and some background for the viewers, just to kind of know where you're thinking about it, like where you think Bitcoin will be in 2030, 2040. And yeah, I'd love to hear your thoughts on that.
Yeah, so looking at Bitcoin from a zoomed out macro perspective, especially in terms of fundamentals, I'm very, very bullish long term. So I think, this decade, we're going to be seeing at least $1 million per Bitcoin. And it's just, simply put, it's the best store of value. It's sound money, right? It's fundamentally better than gold in every aspect. I mean, I'm not listing every reason, but like I did on Spaces, but it's just a much better, asset to put your money into than fiat or stocks or even real estate and gold and other assets. So I think that it's still very early in global adoption. I mean, we're not even at 2%. And the fact that we have companies and countries adding Bitcoin onto their reserves, and just years ago, people were calling Bitcoin a Ponzi scheme or a scam, right? I mean, we've come a long way. So I just think that this is the decade where we see significant adoption in Bitcoin. And I like to look at it just from a perspective of what is Bitcoin as a perspective or as a percentage of global assets. So if you look at kind of the total value of assets around the world, including debt, we're talking $900 trillion. And I think this decade, I can see definitely 1-2% of the global wealth, including debt, going into Bitcoin. So that that gives us $9 to $18 trillion in value. So that puts it at a much higher price point than this decade. So it really makes it look like 30, 40, 50, 60K is just a rounding error when you look at long term. So yes, I do focus a lot on near-term price action on chain and things like that, but my long-term view is very bullish and I'm really confident. So, I have my HODL position that I will pretty much never sell. I'm giving that to my kids, for family. And I do have like a swing trading position, but that's more like swinging the cycles. So, I'm looking out multiple years and decades with this asset. So kind of, I guess just in terms of strategy, right? Because the fundamentals are strengthening and we're seeing bullish trends on chain, multi-year chart looks really good. When we see these dislocations in price where, fundamentals on chains are still strong, but the price is falling, when you get that divergence, to me, that's a huge buying opportunity, because there's nothing fundamentally bad happening with Bitcoin itself. It's just the price is falling, so it's more attractive. And given that it's so scarce and that it's incorruptible, right? It's resistant to censorship. It's being embraced by people in the world that are financially oppressed and need it. Like every dip, in my opinion, is a huge buying opportunity long term, whether it's a bull market or a bear market. So of course, bear market is the best time to buy, but buying dips during bull markets are also very, very helpful.
No, I couldn't agree more, dude. And maybe it's probably a good time to get into charts. And just while you bring them up, I really like that you mentioned the fact that you've got a HODL portfolio and a HODL stack. That's something else I wanted to mention to people before we started looking at some charts and some lower time frame kind of stuff. Even the best traders in the world and some of the biggest whale traders in the world, they all have a hodl stack in Bitcoin. They all believe that Bitcoin long term is going to be worth millions, and they have 50 to 60 to 70, even 80% of their net worth tied up in Bitcoin, in cold storage, off exchanges, offline, holding it for the long term, and they only trade with what they're willing to lose. Because that's something else I really did want to mention for the new people. Like 95% of traders are going to lose money, so it's definitely best to just dollar cost average, have a massive hodl stack. And if you are an experienced trader, the best traders in the world only trade with 5 to 10%, 20% of their net worth at a maximum. So I think that was something really good to mention. Something else that I loved was you brought up the fact that there's $900 trillion of assets out there, and if Bitcoin gets just 2% of that, that's what, $18 trillion coming into Bitcoin. And we know for every dollar that comes into Bitcoin, you've got to add something like a 3x multiplier on it. So if you have 18 trillion come into Bitcoin, ladies and gentlemen, that's, let's say it's 20 trillion. That's about the same. And you add a 3x multiplier on that. That's like 60 trillion coming into Bitcoin. So you've got to add 60 trillion to the market cap. And that puts Bitcoin at $3 million a coin if it captures just 2% of the global assets out there. So yeah, it's, she's got a long way to grow, definitely. But let's get into some charts, dude.
Yep. Actually, real quick, I want to kind of just give like also more reasoning behind kind of why I really embrace Bitcoin as an asset. So for me, I would say that the two biggest selling points or kind of key takeaways for me is the fact that it's fully decentralized, and that this is for the first time in like human history where we can fully and truly own an asset. And I think that's really powerful because, right now, your car, your stocks, right, your brokerage account, your homes, those are all just things tied to a centralized, server or title company. So there's multiple points where it can be compromised, right? So let's just say you lose access to your brokerage account, or that title company that, that owns the title for your home is gone or compromised. You don't have a way to prove your ownership of assets, right? Like your bank account is just a bunch of numbers on a screen, behind a bunch of code in a bank that can be compromised any day. So let's just say those things happen. You have no ability to prove your ownership of an asset. But with Bitcoin, if you have it properly stored in cold storage, you can verify, obviously through a node that, or on chain, that through the blockchain, that it's yours, and it can't get taken away from you. So, I mean, this makes it really powerful, because if you can custody it properly, this could be passed down from generation to generation. So like this is why it's superior to fiat, gold, right? Equities, real estate, because there's counterparty risk across all these assets, and we don't know for sure if these things will be around. Like I don't even know if the dollar will be around, the next 10, 20 years, because it's like of how horrible the money printing is, right? Or like, I don't even know if my brokerage will be around, right? Because 2008 financial crisis, multiple companies, went bankrupt and they got bought out. Same thing with banks and real estate. Like, what if there's a war, right? Who is going to buy your real estate in the middle of a war? No one. And you can't take that with you, just like Michael Saylor said. So when I think about the ability to hold on to an asset, I'm thinking about like how can I move it or hold it during times of uncertainty or even extreme conditions, right? And it really shows that Bitcoin is like, it's how do you put this? It's the most resilient, unconfiscatable, the most resilient asset out of everything that we talked about. And I think that's really powerful. Very few people understand that, but I think that once the world recognizes what it's capable of doing and what it is, I think there'll be significant upside in adoption. So it's just a matter of time, in my opinion.
No, I couldn't agree more. And I'm really glad you mentioned that. A lot of people say, oh, well, okay, Luke, you crazy Bitcoin maximalist. When Bitcoin hits $100 million a coin and it's appreciating by 5 to 10% per year in purchasing power, what are you going to do with it? Are you going to sell it? Are you going to go buy some shit coins in real estate? Or are you going to go buy some bonds? Or are you going to go seek some yield elsewhere? And I'm like, maybe. Not only does the investment have to outpace Bitcoin's appreciation, but the investment that I'm going to buy with my Bitcoin, I can't store it and custody it in the same way that I can custody my Bitcoin. Right now, if somebody rocked up to my house and put a gun to my head and said, "Hey, Luke, I know you're a public Bitcoiner. Give me your Bitcoin." Guess what I'd say to them? "Sorry, mate, I can't sell it. You need to take me to 5 different locations where I can go and sign a multi-signature transaction. So guess what? You're going to have to take me on a 48-hour road trip, my friend. Let's buckle in and get cozy with each other. But because I can't even sell my Bitcoin if I want to." So that's another beautiful thing about Bitcoin that a lot of people overlook. Just the asset and the way you can custody it is honestly beautiful. And I highly recommend everyone go and read the book, The Sovereign Individual, because that just have basing a financial system on a money that's really hard to confiscate and really hard to steal. The side effects that's going to have on society is absolutely very underrated, in my opinion. It's going to incentivize everybody to peacefully cooperate. And even some people say there's bad people in society. Well, guess what? The bad people know they can't steal anything anymore. So it's going to be a very interesting society once we do transition onto a Bitcoin standard. But I just wanted to definitely mention that point before we jumped in and started having a look at some charts. Thanks for bringing it up. That's a point about Bitcoin that is commonly overlooked.
Yep, agreed. All right, I guess we'll start with just some technicals.
Let's do it.
All right, cool. Let's see.
So Daniel has a treat in store for you guys today. He's got more tabs than I have open on my browser, and that's a bit of a rarity. Let me say that. I have tabs coming out of the wazoo.
All right, can you see my screen?
Yep, I got you.
Cool. Yep. So obviously we're seeing near-term selling pressure. Bitcoin is currently testing the key 50-day and 200-day moving average. So I would say it's a pretty good entry in terms of technicals. Now, the reason why Bitcoin is dropping now is because the futures are dropping overnight, right, for the US market. So this is translating into kind of risk-off behavior. But we're not seeing anything major, on chain developing in terms of sell pressure. So this is more just technical and kind of macro risk off. But what I really like with the chart is that, the multi-month consolidation between 30 and 40K, breaking the downtrend, right? Having momentum flip bullish. And, of course, the golden cross, which is not that reliable, but the fact that we've held 30K and we pushed up and we're now, kind of re-entering like a breakout / uptrend is really good to see. And more importantly, the on-chain is there to back up the bull thesis very firmly, because the overall trend and fundamentals and on-chain is very bullish. So at this point, really, we're just waiting kind of for the near-term macro conditions to kind of finish the correction and for risk on to return to the market, and really just to see kind of that technical price action confirmation. So near term, I want to see, Bitcoin hold the 200-day, which is currently at 45.8K. And as you can see, since the kind of liquidation wipeout from the El Salvador, day, price has been making higher highs and higher lows, which is good to see. The daily chart might not look so good, but I think it's really important to consider what's happening on higher timeframes. So when you look at the 3-day chart, you notice that price has been finding support on the 21-day EMA and the 21-day, which is the kind of the white and the green line. And if you kind of just zoom out, you can see that, there's been a bullish crossover. So the 21-day is crossing above the 50-day, and that's a pretty good signal. Right now, the conditions kind of looking out, longer term are really similar to, I would say, like May, April of last year, and also October of last year. So essentially what's happening is we're seeing similarities in kind of mid to higher term, bullish momentum. And also the hash ribbon indicator, which tracks the hash rate, has also, crossed bullish. So there's a lot of bullish technical and fundamental kind of indicators flashing. And that just signals higher prices in the coming weeks and months. So I want to make it clear that, like, just because a bullish signal flashes on the charts, it doesn't mean that price is going to pump right away. It kind of takes time, for the price to catch up, to the signal, or it's, kind of like it's a delayed reaction. But, people tend to freak out over short-term moves, but what they forget is, like, to zoom out and look at the overall chart. Like, the overall chart is still, is still bullish. I mean, we're not really in a bear market on a technical basis and on the on-chain basis. So what I want to see is as once again, we're seeing support hold on the 3-day, 21-day, which is very good. So we bounce off this level and continue kind of, pushing back into the green zone, which has a lot of, kind of technical on-chain resistance. If we can recapture these levels and retake that 50K level, then that should lead to a solid breakout because we have very bullish on-chain tailwinds to support it. So you want to jump on chain real quick?
Yeah, definitely. I'm very interested to check out on chain as well. For anybody who's new and doesn't understand what kind of macro risk off means, at the end, I might share my screen for a little bit and we'll go through the stock market and maybe have a look at bonds and the dollar index, because I have a couple of charts prepared just to show the macro environment and why that's adding a little bit of sell pressure to Bitcoin in the very short term. But yeah, I think it's very interesting that you mentioned the on-chain and the hash ribbons. It's showing very similar behavior to what it was showing last year. Was it around October you mentioned?
Yep, in terms of the technical momentum. Yep.
Yeah, for anyone who remembers, that was when Bitcoin was just hanging around very quietly. There's a lot of low volatility and we were just hanging around under 10K. And we all know what happened when Bitcoin broke through 10K was it October or November? We had that rally all the way up to 65K. So it's very interesting that it's showing similar behavior to what it was doing last year in October.
Yep, exactly. So I'll just give you a quick glimpse at my kind of on-chain dashboard. So this is from CryptoQuant. I just put together on their pro chart, just indicators and metrics that I like a lot, to kind of give you a better picture of what's going on overall. So they recently put out more UTXO metrics. So this is looking at the age distribution of different cohorts. So this is kind of looking at, I would say, like more near term to up to like 12 months. So like 1 week up to 12 months. So I also kind of, put these colored blocks to show where these cohorts, bought. So every day they keep aging, right? Or it keeps shifting to the right. So we have to keep in mind, what's happening with the age. So, but right now it's really clear that in the purple, the 6 to 12 month, cohort is holding very strong. And you can see that line rising. And we noticed that the selling pressure near term really came from that yellow group, the 3-6 month cohort. So they, they panic sold, the lows a few months ago. And then they also, panic sold this liquidation event right here, as you can see the drop. And what's really interesting to note, right, is that we need to keep an eye on kind of these 4 groups, especially the top 3, 1 month to 12 months, because right now the 1 month cohort is currently aging, and they accumulated, mostly in 30-40K area, and also in the upper 40s. So it's really good to see that this group is kind of holding and not selling, right? Because there were a lot of dip buyers in 30-40K, and also they're also aging as well into the 3 to 6 month cohort. So right now, a big chunk of it is, in that 30-40K range, but still a lot of them bought, before that, kind of between 50,000 and 60,000, 64,000. So over time, they will age more into the 30-40K zone. And that's really important to watch. So we really need to make sure that this yellow line starts flattening out and starts increasing to show that they're not, that 30-40K group is not selling. Now, the next chart I like a lot because it captures more of the long-term holders. So now we have data, from 12 to 18 months all the way up to, the beginning of Bitcoin. So 11, plus years. So as you can see, they're holding. And yeah, you might see kind of like, down here, the line drops. That's just simply because it's aging. So more of the coins from the 12 to 18 month cohort, they're aging into the 18 to 2-year cohort. You can track the actual values happening. But overall, the trend, right, with the older cohorts is accumulation. As you can see here, it's just flatlining or increasing. And I want to make it clear that like, I do expect these cohorts to distribute over time, because that's what they do during bull markets. When the price appreciates rapidly, it encourages these older, holders to start, taking profit on the way up. They're not going to sell all at once. Because they know that, it will kill the market almost. So they have to do it slowly. So I do expect, kind of the strong hand, the long-term holders and the large miners to take profit on the way up, and it will show on chain, especially when it starts to trend. So right now, they are in firm accumulation mode. So in my opinion, right, like the bear thesis is currently, not correct, because they're claiming that this is a bull trap and that, the huge whales are going to dump on retail. Well, we're not really seeing that. They're actually buying, they're not selling. And same thing with the miners. The overall trend with miners is still, very bullish, net accumulation. So for the bear thesis, in my opinion, to be validated, we need to see a trend in selling from long-term holders, large miners, and entities that are holding a lot of the older supply. So it's not really happening right now. Is it possible? Yes, of course, because there's external risks, right? From global equities having a crash, monetary policy, raising rates, tapering, all that stuff. It's possible, but these are low probable events, in my opinion. And I just want to zoom out and show you kind of like what happened, during, previous bull markets, right? So you'll see, during here's the 17 bull market, you'll see that all these older cohorts were distributing throughout the bull market. The lines are trending lower, so it shows that they were selling. And then obviously, during the kind of the bull trap, they really, sold aggressively. So if you look at the chart now, they're just holding. The lines are flat or rising. So that's a really good signal. And now we can kind of jump over to miners and see what they're doing.
Yeah, great. Gotta love on chain. It's very interesting. It's very interesting.
Yeah, it's incredible because it tells you, if you can pull the right data and look at the entities and the cohorts, it really tells you what's happening, and more importantly, the trend, right? So every now and then we'll have like these big spikes up or down, like a huge outflow or maybe a huge inflow, and that might be notable, but I think it's really important to recognize what is the overall trend on chain, right? Because one-off events, they don't really dictate the trend. It's just it just happens, and then things go back to the trend, right? So here's the miner chart, right? So it just simply shows the miner reserves, the outflows from the miner wallets to exchanges to sell, and the outflow transaction count. So essentially, it's just kind of showing the activity of miners. And if you look at, just from the beginning of the year here up, it's slowly trending higher. And that's really good to see, because, miners do have to sell eventually to cover costs, right? But the fact that the reserves are holding and slowly grinding higher, it indicates that they don't have an interest to sell. If you look at the kind of the middle section, the miner outflows, the outflows to exchanges to sell are very, very, very low. Like last year, they were selling, 10,000, 20,000 Bitcoin, per day at one point. But I think the most was like 40,000. That was like kind of like, I think earlier. But if you look at the outflows, it's completely flatline. So, and that's directly correlating with just kind of reserves holding, right? And I find what's really interesting is that I look at the data from the 2018 bear market, and actually I'll show you right now. The mining behavior is completely different. So let me pull up the bear market right here. Right, here's the kind of 2017, blow off top parabolic run, and then the bear market. So as you can see here, right, during the run up, they were already distributing and selling, which is expected, right? But the bear market is what really, squeezed out the miners. So when price is falling for a long time and seeing a lot of pressure, it squeezes out the miners. And you can see these big drops in the miner reserves in blue, especially here. So that really got them, to like capitulate, right? So the overall trend of miner reserves during bear markets are down because they're selling because they want to protect themselves, right? Because the more, Bitcoin goes down, their mining profitability drops, or they could actually, operate at a loss. But if you look at here, it's just holding and slowly trending higher, and the outflows, are very low. So that that trend overall this year is still very bullish. And this suggests that they're just accumulating as much Bitcoin as they can because they expect prices to be higher later this year or next year. So that is a really bullish signal because the miners, they hold just under 1.85 million Bitcoin. That's, about 9%, give or take, of the total supply of Bitcoin right now. That's huge. And the fact that they're just holding this and not really selling it is that says a lot. Like the past 2 weeks, they kind of sold 3,000 Bitcoin, right? And you're going to see a headline saying, "Oh, they're dumping." But keep in mind, that's 3,000 Bitcoin out of 1.85 million. It's nothing. And from what I'm hearing, just from contacts in the space, if miners are selling, they're selling because they're trying to cover the cost of transitioning out of China into other parts of the world. So there's transport costs, and also, miners are aggressively, trying to add to their hash power. So you can see this as just selling to make further investment into mining. It's not really to exit. So I think the overall data from the miner perspective is very, very bullish. So we can expect, the hash rate to keep skyrocketing later this year, and especially next year, when you look at the amount of investment, especially with Marathon buying, over $100 million worth of miners.
Well, while you touched on Marathon there, was it recently? I'm not sure if this headline's correct, but was it Marathon and Hut 8 who came out and said they're actually going to hodl Bitcoin for their balance sheet moving forward into the future?
I think that's quite prevalent across a lot of the larger miners in general, and we can see that on chain. And yes, like they're hodling because we're not seeing any major selling activity on chain. I believe Marathon I believe they're lending out parts of their Bitcoin to earn interest, and they're doing things, with their Bitcoin. They're not just hodling. So, because they want to earn a yield off of it, right? But the fact that they're talking about these things, it shows that they have no intention of selling at current prices. And like these miners, they have secured very low energy costs. They have lots of hash power. They're mining Bitcoin very profitably. So they don't really have an incentive to sell, right? Even though they can make a lot of money off of this. So the fact that they're holding and waiting for higher prices, like that's just adds to the supply shock. And, and that's a really bullish signal in my opinion. So
No, I
check out other charts.
yeah, definitely. I definitely agree though. I didn't realize the miners held so much Bitcoin. Was it 1.85 million Bitcoins? Like, was it 9% of the supply, you said?
Yes, almost 2 million Bitcoin right now. That's a lot.
That
And
is
they're not, they're hodling. So
that's exactly what you want to see. That's extremely bullish, and
exactly.
Just adds to the narrative change. I mean, in 2017, the whole narrative surrounding Bitcoin was, I'm just going to buy it and sell it to go buy a Lambo. The narrative wasn't correct. Nobody was talking about this being a treasury reserve asset or it being the gold 2.0 and something, as Michael Saylor says, you don't sell for 100 years. We didn't have any of those narratives back in 2017. So it's really interesting to watch all these narratives developed, but not just the narratives, the on-chain fundamentals are backing up the narratives. I think this is the most illiquid supply that there's ever been on the Bitcoin network. I can't remember the exact figure, but I remember it was up above 85% of the Bitcoin supply is currently illiquid. Like there's only 4.5 million coins on exchange for sale. So very interesting.
Exactly. And this is another thing to mention. So we're having all these bullish hodl trends, and all the big holders and older holders and large miners, they don't want to sell. And on top of that, we have the exchange balances at multi-year lows. So we currently at this moment, around 88% of the total supply of Bitcoin is off exchanges. So we're talking about an asset that is extremely disruptive and powerful, that only has roughly 12% liquid supply available. So if you just kind of do the math, if because not all of those, 4 million or so Bitcoin exchanges are meant to be sold right now. So if a big company just comes in and they want to buy 10,000, 50,000 Bitcoin, if they do that all at once, it's going to cause a huge, flash pump. It's just there's not enough supply to meet it. So that's why it takes a lot of time for these big companies that are coming in to buy Bitcoin. So the fact that we've had 2-3 months between 30K and 40K, and now kind of like a nice run up, and now a midterm consolidation, that's just really good to see, and that gives the larger companies, entities, more time to accumulate, and we're seeing that because Bitcoin is being scooped up for cheap and just taken off the exchanges, and now we're seeing these multi-year lows. So that's just really incredible to see. Now here's a really cool metric. It's called the mean coin age, and think of it as like a way to kind of track the trend of long-term holders. And it really looks at whether they're in reaccumulation or distribution, right? So it's just like factoring in all the UTXOs and kind of the cohorts, and kind of putting together a mean age, on the Bitcoin entities. So in aggregate. So and that's shown in the blue line. The green and the orange line are just moving averages to kind of track the trend, right? So this is pretty interesting. So during the run up earlier this year, right, kind of the first half of the bull market, we saw price appreciate, but we also saw the mean coin average drop, and that just shows that some of the long-term holders were distributing, onto retail, which is completely expected during a large run up, because when price runs up 3, 4, 5, 6x, institutions take profit, and we saw that, right? So we kind of went into distribution, and then of course, in May, when all the leverage got flushed out, and all the FUD, and the tweets from Elon happened, we had a huge pullback, that led into consolidation. But if you look at the blue line again, right, it started trending higher, which indicates that the long-term holders and the older entities are starting to reaccumulate, and they're not selling. When they're selling, it causes the blue line to fall. When they're accumulating, it causes the blue line to rise. That's just simply how it works. And I was just playing around with technicals, and I was like, oh, why don't I put a 50-day moving average, to see the trend, and also a 200-day moving average. And guess what? We had kind of a bullish cross, and now it's an uptrend. And there was 3 dips in the MCA, and they all found support at the 50-day and bounced up. So this just firmly shows that they're in accumulation, and they're not distributing yet. They will eventually, when the price, especially breaks all-time highs, in my opinion, which will probably happen in October, November. And we can kind of go back in time and look at the behavior, right, on how this metric performed, during, I guess, previous bull markets. Sorry. So here's like the 2017 bull market, right? So we had nice parabolic move to the upside, and you can see the MCA was declining, so they were distributing this entire time. But during the bear market, right, as price dropped 70-80%, you can see the MCA starting to increase again. So they distribute during bull markets, during rapid price appreciation, and they reaccumulate during bear markets, because that's the best time to buy, right? And it just kept rising and rising and rising throughout the consolidation, 6K, 3K, and just kept going up. And then same thing with the 2013 and the double pump cycle. I think the current cycle is actually more similar to 2013 based on kind of the structure. So just give a second.
I love how you have the areas marked on that bottom chart. You've got them labeled distribution, reaccumulation. It's very clear to see the kind of how that specific metric reacts in a bull market and a bear market. It's very clear. It's as clear as day. You can notice the difference.
Yep, exactly. So here's the 2013 cycle. So we had that first big parabolic run up, right? And if you look closely, you can see they were distributing as it dropped. But we had a very, very large drop in 2013. And the long-term holders immediately went into reaccumulation, as you can see by the increase in the blue line. And kind of spent the year consolidating. But eventually, in the second half of the 13 cycle, price went up like crazy, and you can see the older holders distributed, and causing the blue line to decrease. So in my opinion, I think Bitcoin is probably somewhere, right here, kind of like in the October timeframe, September timeframe of 2013. So I think the next quarter, Q4, maybe Q1 2022, we should see something like this, like a huge run up and then eventually parabolic move to the upside. So, I just want to make it clear, just because they start distributing doesn't mean that it's over. It just means that it really means that price is starting to rapidly appreciate and they're incentivized to start taking profit and distribute. So the kind of the warning signal, right, for traders or whatever is when price starts going really parabolic, and that's when risk will increase. But overall, it's just very similar to 2013. So I think I'll be watching this very closely, and I'm just kind of waiting to see when they're going to start distributing, when the price appreciates. So right now, they're just holding and accumulating. So the fact that bears, they say this is a bull trap, well, the data clearly contradicts that. Let me show you another chart.
I couldn't agree more. The on-chain data definitely doesn't back up a bearish thesis. I mean, I think we were talking about this before we started recording. From that crash that occurred on the El Salvador, the very day that El Salvador made Bitcoin legal tender, Bitcoin dropped from 52K to like 42K, something like that, 15 or 20% dip overnight. And the whales bought that dip, didn't they? We saw an uptick in whales on the day it crashed. So
exactly, like that liquidation event, it was just $4 billion in leverage flushed out completely, and it happened practically all at once. And that led to kind of retail traders panicking. So we saw a lot of on-chain selling in the 3 to 6 month cohort. But that dip, it didn't really affect the older holders. They just remain calm. It just kept flatlining or moving higher. So, and also we saw a big pickup in the older wallets, the larger wallets, adding Bitcoin. So it was obvious that the dip was being bought. And also it was just so attractive in terms of price. I mean, it tapped, rising trend line. It hit multiple key technical levels. So that was like a perfect kind of textbook, play to buy the dip. But here's the SOPR. So it just measures the profitability of the market overall. So it has an adjusted basis, a SOPR that tracks long-term holders in the middle, and also one that tracks the short-term holders. So this is really cool to see, because right now, any value over 1 indicates, the market's in a state of profit. So the yellow line kind of shows, okay, what's happening overall, and we're just above it. So when the price dipped last week, kind of during the El Salvador kind of crash, or the week before that, it was kind of hovering like just under 1 or at 1. So that was indicating that the mid 40s is a very key kind of break-even point for the market as a whole. And what's really interesting, right, is that if you look at the green box in the middle, so here's the 30 to 40K consolidation for Bitcoin. That entire time, the SOPR for long-term holders was above 1. So they were in profit this entire time. So it didn't really affect, long-term holders, right? And if you look below that, the red box, the short-term holders were underwater at a loss the entire time and panic selling at the lows. So that, it just really shows that long-term holders, they're the ones that bought earlier for much lower prices. And even the 55% crash, they're still fine. It didn't affect them. And I actually want to quote a fellow friend of mine. His name is Gal Cordero, also a critical analyst. So he actually kind of looked at the data and showed, what happened during bear markets and bull markets. So in summary, during bear markets, the long-term holders SOPR is below 1. So if the long-term holders are at a loss, that kind of adds more selling pressure, right? And of course, short-term holders are also at a loss. But the fact that during this correction, the long-term holders remain strongly in profit, that's another point that shows that this is not a bear market. So, this is, there's just so many data points that show that this is not a bear market. Of course, it's still possible, right? All it takes is just, to have all these long-term holders and miners start dumping all at once, or maybe a black swan event. It's possible, but it doesn't seem likely because the overall trend is still very bullish. So that's why, I keep making bullish calls and saying all these near-term dips are just opportunities to add. I don't see any reason to sell, unless you're desperate for cash. But, I think we're all in this for long term. So, any dips, in my opinion, should be bought up. So yeah, this chart is really interesting in my opinion. And kind of quickly cover one more chart, just the open interest and the funding rates. So this is pretty important to cover because it kind of shows you, I guess, how healthy the market is in terms of structure, right? So let me bring it up to a daily chart. So here's like the kind of run up earlier this year, right? So the open interest was just soaring, pushing higher, higher, and higher, and that's shown in the kind of the light blue color. And below is the funding rate. So the problem here was that there was excessive leverage in derivatives, and also really, really high funding. So when the funding is really high, that means the longs have to pay the shorts. So it's not, when you have like funding rates really high, for extended periods of time with increasing open interest, it just shows that the market is kind of excessively long, to the upside, and that makes the market or increases risk in the market. So all it really takes is just kind of like a 5% drop, and then that could trigger tons of liquidations and forced selling, and then that's pretty much what we saw. So kind of like the China, mining FUD, Elon tweets, and all this, just a whole barrage of FUD coming on the market, that was enough to liquidate, tons of leverage. So we saw just, it was a peak of around 15 billion open interest, and it dropped all the way down to 5 billion in a month. So that was a huge wipeout. And if you look at now, right, we kind of had something similar, but not as aggressive. So open interest was increasing leading up to that 50K, 52K kind of top. And then kind of the El Salvador thing happened, and we had a huge wipeout. So, but what we notice here is the funding went back to neutral, or it's slightly negative. And it's really good to see kind of leverage flushed out, because it cleans out the system and it kind of resets everything for another push up. So it kind of flatlined, for about a week or two, and then now it's kind of slowly pushing back up with the price. So that's good to see. It's also really good to see that the funding rate is actually kind of neutral negative. So it really shows that there's potentially shorts being skeptical and shorting the rally, and there's not that many longs being built up in terms of trend. So something good to see. So we can expect as price appreciates later this year, we can definitely expect open interest to keep rising as people build positions on derivatives, and also for the funding rate to increase. So the only issue is when we see kind of like a rapid increase in open interest and funding starting to be excessively positive for multiple weeks or months. That's when risk will probably start increasing in the market. So right now, there's nothing really to be concerned about. So yeah, that's kind of just a quick basic overview of the dashboard. There's kind of too much to share, but all right, let's talk macro.
Yeah, let's do it. No, thanks for sharing, dude. That was amazing. I might share my screen, and maybe we can have a look at a little bit of macro for the people who were who don't understand what we were talking about when we first started talking about macro risk off and that kind of thing. So the host is disabled.
Yep.
So that means
I'll make you host. Give me a second.
Sweet. Yeah, so I just think it was worth mentioning as well that dip that we saw from 65K to 29K, a lot of people and a lot of bears in particular, they're saying, hey, look, in a Bitcoin bull market, we've never seen a 55% correction in a bull market. So technically we're in a bear market, and that's why a lot of these bears are coming out saying they're bearish. But what they're forgetting is that was a black swan event. Okay, we've never seen a nation state in the form of China ban mining on the Bitcoin network. And what was it? 50 to 60% of the hash power resides in China. So 60% of the miners had to sell Bitcoin to come up for kind of expense costs and that kind of thing to move. So I think, and the bears are kind of ignoring all the really bullish on-chain stuff at the moment. So I just think it's definitely worth pointing out. The bears that are just looking at technical analysis, they're saying, hey, look, Bitcoin's never done this before. We must be in a bear market. But they're ignoring all of the really good on-chain stuff that you shared. So that was really amazing. Thanks for walking us through all the on-chain. I'll
Yeah, of course.
definitely be doing a little bit of reverse, and I'll go and watch this one again, I reckon, but to go and learn a little bit more myself. But so having a look at the stock markets, we have the S&P 500 pulled up here at the moment. So you can see the massive bounce that we had. This was your COVID crash earlier this year. The Fed comes in and says, hey, look, we'll buy everything, QE infinity, and you can see the massive rally we've had. Now, a lot of people are kind of looking at this rising wedge formation, and typically a rising wedge breaks to the downside. It's a bearish pattern. So when we're talking about stocks are going risk off, this is what we're talking about. Stocks have only sold off a little bit at the moment, only 2 to 3%. But if stocks have like, I don't know, a 5 or maybe a 10% pullback to this kind of support range for here, that could bring Bitcoin down in the short term. And I think it was stocks going a little bit risk off was what contributed to Bitcoin crashing on that El Salvador day when it crashed as well. So another thing that you see flash red when we enter a risk off environment and stocks crash is you typically see the dollar index rally. So people run to cash. And this is a bullish chart pattern. So this is an inverse headed shoulder pattern. You can see that it has the left shoulder, the head, and the right shoulder. And then this is your neckline through here. Very rough neckline, but you can see the Dixie kind of looks as if it wants to break out and go for a rally while stocks look a little bit bearish. And then another little thing that I keep my eye on when I'm looking at macro is treasury bonds. So bonds is similar to the dollar. They get bought up when stocks are selling off. So the bonds are considered a somewhat kind of safe haven. So you can see again, it's looking maybe a little bit bullish. So this is, I think, the 10-year yields. So I'm not really sure where that kind of wants to go. Maybe it wants to go lower. So that would indicate bonds being bought and people are selling stocks. So this is kind of like a bit of a bear pole kind of thing. So they're just a few things that signal we could be in a little bit of a risk-off environment for stocks, but obviously this is all speculation and very short-term based. And all the on-chain data kind of backs up the fact that whales would probably be ready to buy the dip if Bitcoin is correlated to the stocks in the very short term. But yeah, that's just a couple of the things I'm watching there with the macro environment. I'm trying to think. You go, sorry. No, yeah, so I think we've talked price. We've covered the on-chain. I reckon that's probably, I've had you here for probably over an hour now, mate. Probably be a good place to wrap up. Is there any kind of final thoughts that you've got or any final comments for the viewers or the listeners?
Oh, if that was 1 hour, that was so quick. I had no idea.
Time flies when you're having fun.
I was trying to keep it quick and concise, but I guess I went a little too much. But yeah, just quick comments. I want to make it clear that I remain long-term bullish, even though if there really is a bear market, okay, that's just more opportunity to buy cheap. But I don't think that will be the case because at the moment, the overall trend and fundamentals on chain remain very bullish. So until that changes and we see a trend of selling, then then I will have to reconsider my thesis. So, but I just want to make it clear, right, that I acknowledge the analysis of the bears, but I don't think they're looking at the big picture, meaning they can creatively look at and draw out all these technical fractals, right? But most of them occurred during bear markets, like for example in 2018. That's where they draw a lot of fractals, and that and 2018 had bull traps. So, and that was post parabolic moves to the upside, and there were just a lot of whale selling and whale exit liquidity happening, and you can see that on chain. So like they might be able to draw all these fractals and make it look very accurate to what it looks like now in terms of charts, but what they're failing to do is they're not acknowledging what happened on chain. So because on chain during the bull traps was very bearish, you saw massive exit liquidity, miners are dumping, large holders were all dumping. But now the charts might look the same because they can make it look the same, but the on-chain is the complete opposite. It's just firmly bullish, and it's really hard to kind of believe that narrative. So I don't think they're, seeing the big picture. So for the bear thesis to be validated, we need to see the long-term holders and the whales and older coins just start dumping and turn that into a trend of selling. That's not happening right now. So, and I do acknowledge there is near-term risk, right? And I mentioned this for months, saying that September, October was when volatility returns to the market. So yes, there is definitely correlation between Bitcoin and stocks and risk assets, and of course monetary policy. But I want to make it very clear that right now, rates are still at zero. It's really hard for the Fed to even start tapering, even though they want to, because the economic data is kind of like very mixed, right? And the Fed even acknowledged, they said that even after they complete tapering, which is, I think, is nonsense, the rates will be lower for longer because they're just going to keep redefining economic terms for inflation and whatever, and they're going to keep kicking the can down the road and keep printing money. Because we saw that last time they raised rates, the market had a nasty reaction, and they had to walk it back. Okay, sorry, we're going to cut rates again and do more QE. Sorry, and on top of that, the Fed balance sheet is at all-time highs. Long-term, risk assets tend to be correlated to the movements of the Fed balance sheet. So, and right now it's just making all-time highs every single week. Every month the Fed is buying $120 billion in debt, and there's trillions of dollars sloshing around the system looking for a store of value. So where's that money going to go? It's going to go into equities. It's going to go into real estate. It's going to go into risk assets. It's going to go into Bitcoin. So the macro environment might be risky near term, but it's still overall very favorable for risk assets because rates are lower, for longer, and the Fed balance sheet keeps making record highs. So what I learned is don't fight the Fed. I did that years ago and I got burned. So, I do think the stock market is in a crazy bubble. It's the biggest bubble in history, and fundamental valuation metrics are just completely ignored at this point. But the thing is, it's because there's a flight to kind of risk assets because paper money is losing value. People need to put it into something, right, to hedge against that currency devaluation. So this is nothing fundamental about, oh, I love the economy, it's doing good, I'm going to buy stocks. No, it's because people are like, I need yield, I need to protect myself, I need to protect my purchasing power. So stocks, real estate, yes, that's where money's going. But I think long term, Bitcoin is the best way to protect that purchasing power because it cannot be debased. It cannot be manipulated by central banks. It's programmed, monetary policy, and that makes it, for me, much more desirable than stocks, which have tons of counterparty risk and uncertainty, and real estate, which has its own risks. They're both great asset classes, but I think Bitcoin is going to outperform, by a huge margin this decade and beyond. And yes, that's the S&P divided by the money supply, and it really shows. Yeah. Everyone is bragging about all their gains in stocks, but if you think about it, we went nowhere.
Yeah, when I handed it over to you before, I was like, oh, any final comments, Daniel? I felt like I was forgetting something. We didn't really talk about macro because we talked about it so much off air, but everything you just said then is 100% true. The Fed can't raise rates. We're living in the biggest Ponzi scheme of all time, ladies and gentlemen. We have a $350 trillion debt bomb with a global debt to GDP over 350%. There is no way the Fed can raise rates. Over 30% of the companies in the S&P 500 right now are considered zombie corporations. They can't even pay the interest repayments on their debt. Okay, there's no way the Fed is going to raise interest rates. They can't. I think it's all 100% agree. I think it's all theater. That with Jerome Powell walking the rope and saying, oh, we might taper, we might not taper, because we might have a look at what happened in 2019 in the taper tantrum event with the S&P 500. Jerome Powell, we'll take a look at that in a second. First, we'll have a look at the S&P 500 divided by the M2. So this is the money supply, ladies and gentlemen. A lot of people say, hey, look, my stocks are up 800% over the past decade. I'm doing great. There's no inflation here. I'm doing great. I've got a great inflation hedge, sorry. But when you actually divide it by the money supply, the M2, you can see stocks are down 30% since the 2000-year peak. So you've been sitting in the S&P 500 and an index fund since the year 2000. Many people say, hey, look, I'm up 1,000%. I'm up 10x. But no, you're not. You've just been completely diluted and devalued by the increasing money supply. So that's a chart I always like to show people. Stocks down 35% when you actually account for the M2. And when you look at Bitcoin divided by M2, this is something else that's really interesting and a lot of people aren't talking about in regards to this bull market. All of these stock to flow models and all of these Bitcoin bull market 4-year halving cycle predictions, they're based upon like 2019 and 2018 data when the money supply was relatively stable. But since 2020, the Fed's increased the money supply by what, 30%, 25%? And when you actually have a look at the Bitcoin divided by M2, we've only really just gone past our 2017 peak. Bitcoin's only up 133% since the 2017 peak. That's not really much of a bull market, ladies and gentlemen. You can see we've kind of come back, retested it, and we haven't really gone that far. So that's something else a lot of people don't take into account. And maybe we can have a look at the taper tantrum that you were talking about earlier, because this is an example of what happens when a central banker tries to normalize rates. Was it in this is 2019 here, 2018? Was this the taper tantrum? Yeah, so the Fed comes out and it says, hey, look, all of that quantitative easing we did in 2008, QE 2, 3, and 4 that we did through 2008 and 2018, that was all temporary. There's nothing wrong with the financial system. We can pay back the debt that we've got on our balance sheet. Trust us. This is still capitalism, okay? So I think Jerome Powell came out in, what was it, 2018 or 2019? He said, we're going to try and normalize the balance sheet. We're going to try and sell. And look what happened to the stock market. Stocks sold off 20% in like 2 to 3 weeks after our mate Jerome Powell made that announcement. And he had to quickly reverse course and say, oh, you know what? Maybe we'll continue this quantitative easing kind of forever QE monetary policy, because guess what? The money that you're holding in the bank's a Ponzi. The money that you're holding in the bank is an absolute fiasco and it's backed by nothing. So I think that's an interesting point to point out. They can't normalize it because stocks are going to sell off. And when stocks sell off, the Fed has to step in. We saw what happened in March of 2020. Stocks sold off, like, what was it, 35% in only 4 weeks? In the fastest and biggest crash, not the biggest, but the fastest crash in history. So this was actually faster than the 1929 stock market crash. The Fed had to step in and announce quantitative easing forever down here at the lows to stop the stock market from crashing. So I think that's what Daniel and I both expect. If stocks pull back 5, 10, 15%, guess what old mate Uncle Sam's going to do? He's going to have to step in and just keep printing dollars into oblivion, because you can't taper a Ponzi. That should be the summary of that long rant. You can't taper a Ponzi. But I think we both kind of agree on the macro kind of landscape.
Yep, I agree. And I mean, it really kind of, for our generation, right? It just makes life more difficult because our jobs, can barely pay for a home or even kind of just get by, right? Kind of just from living expenses. But year to year, I mean, we saw real estate appreciate 20, 30%. The price of used cars soar, right? The price of groceries went up significantly. And they all increased at a faster rate than your paycheck grew. I think most people's paychecks just kind of went flat. So, if this keeps up, it will just take you even longer to save up to buy that house, because every year the price keeps going up and up and up. So it makes it even harder to attain. So I think that's just encouraging reckless activity to kind of invest in stocks and to kind of speculate on risk assets, right? To kind of help people, I guess, build wealth. But the thing is, I have to emphasize that, like, trading and doing all these things, that's not how you build wealth. That's how you actually lose money, because most people that trade end up losing money. And so, like, I gotta pound the table on this. Wealth is built when you invest in a quality asset at attractive prices, especially during downtrends or pullbacks, right? And you hold for a very, very, very long time. And I think the best time to do that is when the asset is misunderstood. So one thing I didn't talk about was, like, being a long-term investor in Apple and Tesla. So I bought them many, many years ago when they were misunderstood, right? But during those times, the fundamentals of those companies were very good. Like they had massive growth, trajectories, lots of products in the pipeline, right? The business kept growing, but the stock price kept falling. So there's a huge disconnect between fundamentals and price. And of course, when price was falling, I was building positions at key technical support because it was very attractive and it was oversold, testing very, multiple key levels. So that's when I bought those positions, and I held long term, and I was rewarded, a lot for it. Like the Tesla position has been doing very well over the years. And so the people that think that they can trade Bitcoin and get rich with leverage is just, I think it's a fantasy. And that's why most people, when they trade Bitcoin over the years, most of them end up with less Bitcoin than they started. And that's not a good thing, because I think we're looking, too many people are looking at the dollar value of their Bitcoin, which I think is kind of irrelevant. For me, like what I value more right now is how much Bitcoin I have. Because I think, if this money printing keeps up, it's just going to keep, devaluing and debasing the dollar. So it's just the dollar is becoming less relevant over time, in my opinion. And I do think eventually, it will get to a point where it actually matters how much Bitcoin you have, because that's where you're going to be, using or spending. So, so after I kind of, broke that trend of me focusing on only dollar value, it makes me want even more Bitcoin now, because I'm measuring my holdings in Bitcoin, not dollars. So, and I can proudly say that, the 50% crash from a few months ago, and also the recent liquidation wipeout, I made some big buys in Bitcoin at 30K and also in, 44, 45K recently, because I still have positions in stocks. So I sold my Apple stock near all-time highs at 157, and I used the funds, to buy Bitcoin between 43 and 45K. So just when you see those opportunities where you have an opportunity to sell an asset that is so richly valued, and at the same time you can rotate into an asset that's so undervalued or so misunderstood, that to me is like the best rotational trade you can ever do. So I've not sold a single sat that I bought 30K. I'm holding that, as long as I can, adding parts of it to my hold position, and then I will swing kind of the rest of the cycle. But that hold position, I'm not selling it. That's for my kids. That's locked away in cold storage. So
I love it.
do you want
I
me
love
to
it.
make it clear? Yeah.
I couldn't agree more, mate. I think I love that you brought up the fact that you want to be making more Bitcoin, whatever you're doing. If you are trading with 5 or 10% of your stack, don't measure it in dollars. Your unit of account should be in Bitcoin. If it's going to be the evolution in money, whether you think that's going to be in 5, 10, 15, or even 40 years, your aim should be trying to accumulate more of that undervalued, misunderstood asset, as you call it. I really like how you do call it a misunderstood asset, because that's what Bitcoin is. If everybody understood Bitcoin, guess what it'd be priced at today? It wouldn't be priced at 45,000 a pop. It'd be priced at 10 million.
Millions.
Yeah, yeah.
Millions.
That's the asymmetric bet that comes into it. People don't get Bitcoin. They still think it's some crazy magic internet money, and that's why it's so underpriced. But you mentioned there,
Yep.
you were talking about the value of the dollar, and it's just pushing the price of everything up. And the things aren't actually going up in value. It's just the dollar's being debased to kind of give you the illusion that things are going up in price. And it just reminded me of property prices here in Australia. I did the article the other day. I was having a look at the property prices in Australia. You can see in 1970, the average house price in Sydney was $19,000, and in Melbourne it was $13,000. And if you have a look at it only 50 years later, the average house price in Sydney is 1.1 million, and in Melbourne it's 875,000. And it's all it is. It's just the dollar being debased. And here's some more charts of property in Sydney and Melbourne. You can see when you price it in the Australian dollar, or the Australian peso as I call him, you can see it goes up and up and up forever. It's up and to the right. It's vertical. But when you price it in gold, a money that's not being debased, property in Sydney and Melbourne is actually down 50% in both of them since the 2008 housing bubble peak. So I just think it's worth kind of showing people the illusion. Like, this is the red pill, understanding how inflation works and how the dollar's been debased to push up the price of things. Like, here's a little a little shopping paper, I guess you'd call it, from the 1970s in Australia, you can see you could buy a whole chicken for $1.09. You could buy a chicken for. How much does it cost us these days? 8, 9, 10, 12 pesos sometimes. It's unbelievable, and it's just a massive. I think a lot of people think this is normal. Like, we suffer from recency bias. We think it's normal for the price of things to go up and up and up forever, but it's not. And once you start debasing the money, it always ends. It always ends the same way. I think, was it Voltaire who says the intrinsic value of paper money is zero, and it will always trend to its marginal cost of production. And I think that's what we're living through. I think we're living through a hyperinflation on a global scale in a globally interconnected debt-backed Ponzi scheme. And thank God we've got Bitcoin, because that's the solution, or the exit valve that we've got to transition off this broken monetary system onto the new, improved, and better monetary system, being Bitcoin. So
exactly, I 100% agree. I mean, it's just, we live in a time where it's so important to search for a quality asset that we can hold for generations, right? Because, you know, back then, the previous generations, they're like, oh, just work and save, and you'll eventually own a house. That was true maybe like 50 years ago, but today, if you do that, you'll be on the streets. So,
yeah,
you know, I mean, like, the two worst things you can do as an individual right now, especially if you're our age, in our 20s, is the worst things are you can trade and sit on cash. You're guaranteed to lose money if you do those two things. So you really have, you have to find, you know, the asset that can hold value over time, protect purchasing power, you know, and has all the qualities of money and everything. I mean, it's just, we talk about it every day, but I think it's Bitcoin. I mean, there's nothing else in the world that I see, you know, that can match that. So yes, okay, all coins will probably outperform Bitcoin this cycle. Okay, that might be true, but how about looking out the rest of the decade? You know, in my opinion, I don't think a lot of these alts, the 10,000 plus alts we have, are going to be around. I don't think so. Okay, there's just not enough eyeballs and money to go around and share kind of everything, right? So I really think that, you know, Bitcoin, in my opinion, is the highest quality asset out of all the, you know, crypto assets out there and also in the world, and that it will be around for a very, very long time. So I'm really confident and feel safe holding it, you know, holding my Bitcoin for my family the right way, rather than sitting on cash, or even, you know, I don't even know about the security of, you know, my stocks in the brokerage. We just don't know, you know. So in my opinion, the most secure, you know, certain asset out there will be Bitcoin. There's always risk, but long term, it's Bitcoin. Yeah,
I couldn't agree more. And I think we touched on it earlier. The reason Bitcoin's still so underpriced is because it's misunderstood. I think that's, I think a very similar sentiment is true of crypto and cryptocurrencies. I think the reason they're priced so high, and the reason that they outperform Bitcoin in the short term, is because they're misunderstood. People don't understand that they haven't innovated anything. People don't understand that even the most decentralized crypto in Ethereum is actually very centralized. And it moving to proof of stake is just more proof that it is trending towards more and more centralization. So I agree as well with the long-term thesis. I think long-term, there's not going to be 1,000 coins. I think it'll actually only be Bitcoin. I think everything that these other scam coins claim to do, whether it's smart contracts, Web 3.0, NFTs, and gaming, all of it can be done on Bitcoin, whether it's a side chain like RSK, or whether it's a layer 2, 3 like Liquid and Lightning Network. That's another thing that crypto guys misunderstand. Everything these scam chains claim to do can be done on Bitcoin with better security. So I think naturally all of that innovation or technology will be done on Bitcoin in the long term. But I think what do you reckon? That's a probably good place to end this one, mate.
I think we can go on for another couple of hours, but I think we'll have to end it here.
We could talk we could talk for hours. We're on these spaces for hours and hours and hours on end. So we better not do that to the poor listener. Otherwise, we will end up with a 5-hour YouTube video. So
Yeah.
I've had an absolute blast in this one. I've learnt a bunch. I'll definitely be rewatching this one to go and have a look at all those amazing on-chain analytics. Thank you so much for coming on, Daniel. Is there any last words you have for the listener, where they can find you, find your work, and where they can reach out and get in touch with you?
Yeah, man. Well, first of all, I had a great time talking to you, Luke. Really appreciate it. I can't wait to be back on to talk. You guys can follow me at DanielJoe916 on Twitter. I write for Crypto Quant and Crypto Potato. So if you just kind of follow me on Twitter, you'll see links to those articles that I post. And yeah, long-term bullish, buy the dips. Don't believe that the false narratives that are being pushed out by media. Look at the data and look at the trend, and both are bullish. So we'll leave it there.
I love it. Thank you so much for coming on, and see you guys. Have a good day. We should make this like a monthly or a weekly catch up or something too, if the people demand it.
I know, seriously. I mean, I have like weekly calls with just investors and other things, and that feels like a year in between, because so much happens, in just 7 days in a week. Whether it's news flow or just things happening in the charts or on chain or any developments. I mean, it's like, so we should definitely, like talk as much as we can, because so much happens. And I think this quarter, like Q4 and maybe early next year, is just going to be wild.
Okay, guys, I really hope you enjoyed that one. I'm feeling pretty damn bullish after speaking to Daniel, and I've learnt a bunch by looking at all those on-chain fundamentals and analytics. So like we mentioned at the end, you guys let me know in the comments if you want me to make this like a fortnightly or a monthly update on Bitcoin, where we take a quick look at the charts, where we talk a little bit of macro, and we take a look at the on-chain fundamentals. I'm going to continue doing long-form podcasting as well, where I'm going to try and interview more and more of the other names in the Bitcoin space, where we talk about the revolutionary aspect of Bitcoin and talk about the fundamentals of sound money and how important it will be in the separation of money and state. But let me know if you want me to also do some price related updates or macro updates once a month or once a fortnight. I'll basically do whatever you guys want to see. So if you liked this video, be sure to like it, be sure to share it. And if you want, feel free to subscribe to the channel so you get updates whenever I put out new videos like this one. So have a good day, guys, and I'll see you in the next one.
Oh my God, I didn't even talk about a couple of things. Like the potential ETF, right?
Oh, yep.
The huge on-chain activity from 30 to 40K. So the mean transfer volume was like 3-4 times what it was last year. And it's easily in the 5-6 figures. So that means that these are big institutions buying, because retail can't do an average volume of like 6 figures,
Yeah.
or even 5 figures. It's hard. But the fact that this was happening consistently throughout the 30-40K range, it really shows that there were big buyers coming in. So in my opinion, right, just like Mike Alfred and other guys have talked about, we believe that these are likely public companies or very big institutions that came in and bought the dip, and they're just keeping quiet about it. But remember, 3-4 months later, when earnings come out, they have to disclose their positions. So I think in the next couple of weeks, maybe October, November, we're going to see, like public filings showing that, hey, we bought Bitcoin. So and I think that will be the catalyst that drives the next leg up in the bull market. And throw in a potential ETF approval, which I'm not hoping for it, like begging for it, but hey, if it comes out, that's a huge bonus. And then factor in supply shock. Multiple orders are not selling right now. I mean, it's like a huge storm brewing, ready for a breakout, in my opinion.
I couldn't agree more, mate. I'm uberly bullish. Yeah. I think we might have to get you back for a part 2, maybe in a fortnight or a month, because things change so quickly. And maybe when we get you back, there will be some pretty big announcements coming out. So thank you so much for coming on. I hope you enjoyed that one, guys. Have a good day.
All right, man. Take care.